Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And well, it's going to be the last EVE Talk for 2022. So I hope all of you guys had a lovely Christmas and that you will have an amazing new year and of course a lot of success and fun in EVE Online for 2023. No real news here to report except that there is another sale happening at the moment that might have an impact on the pilot services. So we will see, you may actually already have seen it on the ticker as well, a little bit of pressure on plex there, but I don't have any real news to report, just that Q1 is going to start soon, so hopefully we'll get the Allegiant system soon. Let's take a quick look at the New Eden store, but I don't think the sale was here, so you can still get the Yule Star skin, of course, pretty cool skin with that countdown, but we're mostly interested in the services where we don't see any sales. So it's again on the website or on Steam if you want to find the better deals. And I guess that will just dive straight into the pilot services coming in at 110. Like that, and here we go for a plex. Let's get that chart up first of all. Here it is, and you can see here that basically we topped a little bit after the expansion to close to 5 million for a plex, and we've got a little bit of pressure here, but I think a big part of that is the higher volumes because of the holiday sales and the extra supply that will bring with it. On the other hand, I think that there is also pretty damn strong demand for the pilot services that is helping keep things in check, because despite the sales that we are seeing, although of course these sales have been in the New Eden store, so they are more accessible for the existing player base and the existing stockpiles of plex and things like that to take advantage of. Here you can see we get a little bit of a more muted response to what's happening, which I think is a sign that there is definitely strong demand and pretty strong expectation for let's get that Allegiant system going. Let's get that 20th year for EVE Online going, and let's see what happens next. The multiple pilot train certificate then basically full recovery and is now in a situation that's pretty much similar to plex if we disregard its biggest sale of the year here early November with the expansion, massive drop in price, huge amounts of volumes, and that of course is something that has been absorbed a little bit more quickly than previous sales in my opinion. You can see here we had a sale in February that really took several months and wasn't even absorbed before we got another big volume spike, and then finally in a month we got back to a price higher than the 1.5 billion where we started the year at. And of course, well, we've got the changes to real life prices that really began to go through the entire pilot services sector, and so here are the new ranges, you could say. And at the tail end here a little bit of pressure with high points. Well, again, November the expansion was definitely a pretty strong time. Then we've got our skill extractors that should show something rather similar, with again sometimes a little bit of their own sales that are showing through, but you get before April, where we had the previous normal prices for skill extractors, CCP decided to up the price for real life money for pilot services, subscriptions, things like that, and you can see how that really started to show through the market as well, with a new floor, you could say, of probably around 500 million ISK for a skill extractor. Here we have one big unique bump. I'm not exactly sure, I think this might have been like event related or something like that, where we actually have some fireworks going off in the back there, but that was very quickly absorbed by the market as well. Then again we've got the expansion peak a little bit later than plex, I think, and then we get that pressure over the holidays because of sales and maybe as well a little bit less demand than at the peak of the expansion. So the impact on the injectors, let's go through that, and on some of the more interesting items. I think maybe I'll take a look at the full year one, but for pilot services you can of course expect that very same pattern, right? Start of the year up until April you get the old range 600 to 700 million ISK for a large scale injector. New changes to the prices, so here's that increase in price, and it really took us quite a while to find the new range, and it seems to be around 900 million ISK for the large injectors. And although we get a little bit of pressure at the tail end, we are basically at 1-year high prices for large scale injectors. 943 million for the sellers, 881 for the first buyer, 875 for most. So we are talking about a little bit more spread that has opened up here. You can see that compared to here, you get a spread that's definitely higher, which could mean a little bit more volatility as well, and a little bit more dependence, I think, pilot services market on what will CCP do next, announce next. Can they bring out really cool stuff that brings the players back to the game? Can they announce cool stuff? Can they build up hype? It is going to be very interesting to see. Then we get the small scale injectors, obviously a chart that mirrors the large skill injectors pretty closely, but on a day-to-day and a week-to-week basis, I must say that the small scale injectors have surprised me by really doing their own thing, despite the fact that they're basically just a number of small scale injectors or a large scale injector. They still do sometimes like go down on a week when large scale injectors go up on a week and things like that you would not expect. So it's definitely its own thing. You can also see how the spread is very thin on this one on the chart, and at the tail end you actually again have that where we get a little bit of upwards pressure at the tail end with higher volumes for the small scale injector, which is the reverse of the large scale injector. But the general trends, of course, on a monthly basis, it's the same. We're talking 187 million to 176 million, so that's just a 10 million spread on something less than 10% by quite a bit. So that's a very tiny margin here for the small scale injector. Seems like it's a bit more of a competitive market, just because it is that, well, you don't need a billion ISK just to start trading in the small scale injector market. And then our final injector, of course, is the daily alpha injector, which has been very, very interesting to me as well. You can see how basically the new prices have not meant a completely different range for the daily alpha injector. Although in August, September here, it definitely tried to do so. But the feeling that I got over the last year and a half is that CCP is watching this market pretty closely, and that they're actually willing to intervene directly with sales timed depending on how expensive daily alpha injectors have become. So here you can see that we reached 50 million ISK. A little bit later we got a sale from CCP, big volumes pushing the price below 40, gave us a couple more months despite the fact that this was like of course the response to the increased real life cost of services, and then we managed to hold on up until August. But then for the summer it was unstoppable. Prices went up to 70 million ISK, slowly recovered a little bit in the month of October, but here in October, a little bit before the expansion, I think CCP did decide to pull the trigger. Very big sale. You can see that here, almost a week of increased volumes. Prices brought down to almost 40 million yet again. Bit of a bump, but for the rest of the last 2 months or so, we have been in a 40 to 50 million range, which I think is where CCP does want the daily alpha injectors to be, because in my opinion, if you make this a daily goal, you gotta keep it realistic even for alpha players. And 50 million, a little bit of exploration or a good amount of doing missions and things like that will get you there. It is a doable goal. 70 million, completely different proposition. So 47 to 41 pretty much million ISK for the daily alpha injector. Very reasonable price, and of course, you never know when CCP decides to let go of the market, so it's not like it's predictable. But if you assume that, because before this there was another one of these sales timed when daily alpha injectors reach above 50 million ISK, but if you assume that this is a pattern that CCP will continue, that they do want the daily alpha injector to remain within a certain range, then you can of course start to predict these and try to buy at the best price, which unfortunately is of course right after a sale, and then you can expect prices to start increasing just on natural inflation, maybe stuff happening in the game, a little bit of hype, more alpha players coming back, putting more demand on daily alpha players, and then you can spot your sell opportunity. And of course you gotta be fast before CCP decides to come in with their next sale, but this might become a predictable cycle for traders to take advantage of as well. But counter to my expectation, I thought that CCP would have to come in more and more often, and so far we haven't seen that. I'm really surprised at how strongly, despite the fact that we find ourselves in a more expensive real-life pilot services, at how stable the daily alpha injectors have been able to be over the last 2 months. So it's actually pretty impressive. I thought we would need a faster and faster cadence of central bank interventions, basically. And then finally, we've got the Hypercore that shows a chart very similar to Plex, and on a 1-year chart again, up until April, things are around 300,000 ISK. Then we get changes to pilot services costs, so it takes us a couple months to get up to 500,000, and now this is pretty much the range that we're bouncing around. With at the tail end, we got max price of 504, and buyers starting to drop off here a little bit, 470,000 ISK. So a little bit less activity again. Well, it is the holidays at the moment, definitely understandable as well. Next up, we've got the minerals coming in at 1025. Or I'll put down 1030 and give myself a few seconds, and let's get going here. Here is the titanium chart. So you can see we are holding on quite well, and on today's data point we were actually, well, you can see a little bit of selling coming in. It is quite competitive, but we were up to the 470 pretty much for the sellers, so things do tend to move quite quickly in the titanium market. Pretty damn good price. Selling above 4.5 in my book is always great, and then buyers at 427, pretty narrow margin here, so strong demand. And here with the expansion, things did change. They got into high gear, new meta, new ships to build, all that stuff has been very healthy for titanium. We got that bump, and we've managed so far to defend that bump with sellers. Well, above 4 ISK is pretty good on a 1-year chart, and above 4.5 at the moment is definitely pretty nice as well. Volume is dropping off a little bit. Again, a little bit less activity, I think, over the holiday season is not abnormal, which could be why prices are starting to go up a little bit, because the Fortress in Nullsec, I think for large ships, that's definitely a hardcore player base that wants to keep going. So might be good news. Let's see if that's correct. Well, for Pyrite it is not. Well, maybe here at the tail end you can see that we're already bumping back up here, but Pyrite is trying to land on 10 ISK at the moment, and sellers 1058, buyers 1004, again pretty narrow margin, probably still a little bit too much supply, but volumes here starting to drop off as well. And if this is supply volume, then this could also start to push prices up, and you can see that today's daily average is already getting closer to that 20-day moving average. So I would not be surprised if we basically got a little bit of like a late bump. For Pyrite, we'll need to see what happens next week. And then Maxellon basically just holding on. Again, couple data points here at the tail end that are telling me volume starting to drop off a little bit, and it could be a supply side thing. So we're at 67 ISK for the sellers, 62 for the buyers. Again, really narrow margin, and definitely not a bad price on the 1-year chart. Not the best, but close to 70 is not bad for Maxellon. So high-sec miners, definitely you want to focus on titanium and Maxellon still, and we'll see if we do indeed run out a little bit of that over supply of pyrite as well, and if that one can make a bump here. So that's it for high-sec. It's been probably a story most of the year, I think, that your focus has been titanium. Well, no, definitely not. So mostly Maxellon actually, right here above 70, and then still being able to bump towards 70. So a couple of really good periods. Then at the tail end, since the expansion, titanium came back on the menu, and Pyrite has basically had a really rough time over most of the year here, being below 10 ISK, just a week here above that. So we're happy that we're above 10 ISK again, but hopefully we can then defend that. For low sec, here is Isogen. I think all of you guys that follow ETH Talk know that I'm really happy with this chart, despite the fact that things have gotten a lot more expensive as well. But this to me was like a predictable pattern that came through, something that I was looking forward to, which is basically we started the year at 100 ISK, but eventually for Isogen that was the biggest casualty of the oversupply problem that EVE Online had for many years, and just Isogen was becoming a side product, basically something that was produced and was just stockpiled away, but we needed just a fraction of what was being produced on a daily basis in New Eden, and as a result this really lost a huge amount of its value. 100 ISK was even not a low price, and this is well within the changes that CCP made to the overabundance for minerals and everything, but Isogen would have the largest stockpiles of any mineral, I think, to chew through, and that eventually started to happen as we moved our way up to 200 ISK, to 300 disk to 400 disk. And here, I don't know if you guys remember, but over the summer we were stuck on that 400 disk mark because of those massive volumes with sell orders with 2 billion units of Isogen that were just stuck there for 3 months on end. We just couldn't move through that. We kept bumping into it, but it was still way too much for the market. But eventually after the summer, we managed to push through that as well. And so now here that we managed to go to 500 disk, you can start to see a more flowy pattern that resembles supply demand that actually fluctuates. So I think we're getting really close to it, despite the fact that there will still be some sell orders there. But you can see what is at the cutting edge with the sell prices at 580 disk, 3 million units, 5 million units, one with 15 million units, but that's the biggest one a little bit down the line. So this is way more in line with what you would expect for active supply demand for Isogen. And then you gotta go down a little bit more. We get 20 million pretty much round, several orders of 10 million units. Yeah, those sellers of those big reserves have gotten smarter as well. Cut it down into a lot smaller chunks, and you will actually at the tail end of it, in all likeliness, sell for a much better price on average. And then here at 650, that's been here probably for like 37 days. Someone is expecting us to reach 650 ISK for Isogen as well. I'll be honest, if we assume that the 10s and the 25 and the 30 million units are all old reserves as well, it's not out of bounds, but it will be through volatility. Then it won't be a straight shot up here. It will be a more volatile period for Isogen. But yeah, 500 disk, it is here, despite the fact that CCP increased availability for Isogen through the new ores in the AO star systems. We are right back here, which to me is an indication that there are still old reserves keeping us somewhat in check, but they can't put they could, but they're smart enough not to put a very strong cap on it like they did here through the summer and early fall. Then our other low-sec mineral is Noxium, that had a glory period at the start of the year. I think during this period here, when we got to like 1500 disk, it was the most expensive Tech 1 mineral in the game coming from low-sec, which was very unusual because Hydrine and Megasite have historically been way more expensive than Noxium. I think supplies just came online, right? Under this new situation where you gotta go to low-sec, there are groups that have basically set up their supply lines, protecting their supply lines, and so we got through a very bad summer for Noxium, going down to 710 disk, losing 50% of its value. But now with the expansion and with the increased production of capital ships, we are starting to get back to, I think, a more reasonable price. 1000 disk for Noxium, both sellers and buyers. Very narrow margin here. Obviously, you gotta bring it in mostly from low-sec, so that is going to be the sellers dictating the price here. But yeah, 1000 disk for Nox, 500 disk for Isogen. I think this is okay, and that we will here start to really see that ebb and flow of supply and demand show through the chart, which I think is a far more healthy situation than, for instance, a completely depressed Isogen market that's just an afterthought for any player in the game. And then we move on to nullsec, that has while you can see here Noxium has been struggling, started indeed well below Noxium, 1000 disk, 50% below Noxium, but then with the changes that CCP has made, allowing for more production, easier production of larger ships, dreadnoughts especially, I think, have been made easier to produce. Demand really started to shoot up as well, with basically a high point here around the expansion, as Hydrine tripled in price over the year. Also gave back a little bit of ground at the tail end here because, again, of the introduction of ores through the AO star systems. There's basically more Hydrine, more Megasite that becomes available. But it has been rather muted, and we're ending the year here at 2700 disk for sellers, 2600 disk for buyers as well. Very expensive, of course, and I wonder if Megasite is above that. Let's take a look at that. So very similar chart right here, where we started even lower, 700 disc, less than half the price of Noxium. And I was really the heyday, the start of the year was the heyday for Noxium, king of minerals, at least for Tech 1 minerals. And then here again you get that same evolution with the expansion really putting things into motion to basically bring Megasite in line with Zydrine on almost a one-to-one basis. I think, yeah, look at that, 2,750 for the sellers, 2,690 for the buyers. So Nelsec Minerals, once again, the most expensive, and Megasite, Zydrine, basically becoming one when it comes to price. Things could change here because remember that historically speaking, Megasite has always been more expensive than Zydrine. The theory would be that there is a little bit more availability for Megasite because you can also get it through Podven and things like that. That is basically keeping it in check, but I would not be surprised if under a situation where you basically need more of it, right, where everything is going full blast in industry, and so you need more Megasite, that Nelsec will basically become even more important, and that then the difference between Megasite and Zydrine will show back up again, with Megasite becoming more expensive. And then finally there is of course still one oddball out for minerals, which is Morphite. Start here at 55,000 disc, found its way towards a 40,000 range, and has basically been there with being slightly more cheap at the tail end here. And this looks like a very bad chart, but I mention it quite often. Back in the good old days when I was actually trading in Morphite, I would buy my Morphite below 10,000 discs. So that I think does put things into perspective a little bit. Basically Morphite became ridiculously expensive early on in the year, and CCP did a couple of very hard nerfs where they doubled availability. Basically, I think it was with Ice and Morphite, they doubled availability, which brought the price down to a 40k, where for now at least CCP seems to be happy with where Morphite is at. And honestly, if we will then look at the Tech 2 ship market, that has been depressed all year as well, which means that they're very cheap for the power that they bring. I don't see CCP deciding on needing to nerf Morphite even more. But yeah, Morphite, not so much a bad year, I would say, because the entire move to the new range is a direct result of CCP increasing the supply, increasing the availability. I think it was doubling it just in one straight go, pushing us from 55 to 40k. So demand is still strong, production is still strong as well, and at the tail end we even have a little bit more volatility, a little bit more volume as well, which I hope will eventually translate to Tech 2 ships, because that's where I want to do my trading. Next up we have the PI market, 2220. There we go, and let's go through the list here. I'm especially a little bit curious again as to how strong we will do, because I'm again seeing strong mineral numbers, so in my opinion strong demand from capital ship production, and that has really also been the story here over the entire year. I think if you follow Eve Talk, you know that this felt like a very strong summer already, with a 1.5 million on the broadcast nodes, and yet through the fall and now here at the tail end we are going even higher in price. So broadcast nodes above 2 million for the sellers, just below 2 million for the buyers, showing really strong demand. Look at the volumes spike here as well. Someone just came in and bought a lot of broadcast nodes, pushing prices above the 2 million mark. And this is another sign that we are still in a very strong demand situation. I have been selling as much of my PI as possible because as I just mentioned, in minerals, CCP did try to solve some bottlenecking problems by introducing extra sources of those minerals. And my thinking here is that when they solve those bottlenecks, PI bottlenecks might just be next. And so eventually I think that if there's another balance action from CCP, it could really be in capital ship production focusing on PI. And I don't think that they want even higher prices for basically the most passive source of stuff in EVE Online. So construction blocks, last couple of days giving back quite a bit of ground, but still sellers are at almost 11,000, buyers dropping off though to 9,000 discs. So another small sign here, lower volumes based on the demand side, that activity over the holidays is a little bit lower. I don't think that we have to panic here just yet. Sellers are definitely not panicking. They're staying at 11k, saying you'll all be back and you'll pay those higher prices. Then we got coolants, right? Another spike here again. August felt like a strong summer, but September, October was even better, above 11,000 disc. A little bit of a fallback here in November, but we are back at practically 11,000 for the sellers, 10,000 for the first buyer. So strong demand still clearly visible here. Enriched uranium, same stuff. Again here 10k was like, whoa, we haven't seen that for a couple of years, and that we get a couple of really strong months here, but that was just a start. And here again at the tail end you can see we went towards 13,000 disc. We're still almost there. Demand, not a lot of it, but the prices are definitely there. 12,400 for the buyers of enriched uranium. Integrity response drones then, I think, sort of confirming that over the holidays and at the moment Nullsec is trying to just produce as much as it can. I'm kind of hoping that this is a cold war in preparation for a hot war, but yeah, for integrity response drones, definitely getting close to that 3 million mark. It's visible on the chart, right on the front page right here, halfway through. So it's 2.9 million for the sellers, 2.6 million for the buyers, and 3 million coming into view. I'll go through this a little bit more quickly because I think the trend will be quite obvious. Mechanical parts, 1 year high point yet again at 11.9. Miniature electronics, spike here right at the tail end. Even some of those that have been lagging behind because of their lower volumes generally are really making back all that ground. 15k for a refined PI material, 13,000 for the buyers. Highest price and like 50% above even historical averages before all prices were basically depressed due to massive availability. Nano factories, an end of the year rally here as well, pushing us above 1 million ISKs. Super impressive as well. 1.2 million now for the sellers. Look at those volumes. Might be some speculation in all of this as well, which would be on the opposite side of where I would be placing my bets, because I would be placing my bets on CCP coming in to try and lower these prices a little bit. But for now, yeah, uniformly the market is basically going crazy here. Or organic mortar applicators pushed above 1 million as well by the sellers. Best price for the entire year. Or maybe there's like people watching me and saying he sold his stuff, let's push those prices even higher. But recursive computing modules, so these advanced PI materials, which are like the most direct link of PI with the construction of large ships and structures, are making 1 year high points. Recursive computing module to almost 1.6 million. And then our robotics at 100,000 disc. No, they failed just short of the goal. That would trigger me to really start to focus on producing them a little bit more. 93,000 for the sellers, 91,000 for the buyers. I still think though on the 1 year chart that this is a very, very good price. And again, this felt right here when we got close to 80k, 75k for robotics. This was like, this is a really, really good summer. We're selling at the best prices we've had in a very long time. And it was apparently just the beginning of things. Rocket fuels next, 1 year high point yet again, 16,000 disc now for the sellers. Self-harmonizing power cores back above 2.25 million, gave a little bit of ground here in December, but demand is just right there. Smart fab units, these are giving a bit of ground, but again a plateau here above 75,000 disc that we hadn't seen for pretty much the entire year. So we're still at 78,000 for the sellers, just buyers dropping off a little bit, I think for the holidays. Especially those which you can see here how irregular these volumes are. So there are some PI materials that struggle with that, and they'll be extra responsive to demand dropping off all of a sudden because a couple of players taking a break for the holidays. But yeah, Sterile Conduits confirming the trend in advanced boom materials, just emptied out. 2 million for the first seller, buyers forced up to 1.4 million as well. Our supercomputers are touching the 100,000 disk mark, just, you know, right here it is. So you can see that potentially on a bit more demand we can push to that. Synthetic oil, 1 year high point above 11,000 disk. Synthetic synapses, 1 year high point above 120,000 disk. Transcranial microcontrollers, a little bit not a 1-year high point basically, but above 100,000 for specialized is definitely really good as well. And even our water-cooled CPU that was just mostly in there from my perspective, because it's a bad one, right? You can see how again irregular the volumes are. They sometimes drop off to nothing. Spend most of the year at around 5,000 disk, whereas something else like coolant and things like that is at 10,000 disk. But here at the tail end, you can see that complete catch-up, volumes going up here as well. Way more structure in that as well. You can see the floor for the volumes being higher than before, and we are now talking 9,500 disks for the sellers, 9,200 for the buyers. This is easily a 50%, 100% trade actually on buying at the low point and selling now. That could have been made in water-cooled CPU. And finally, wetware mainframes, advanced PI, 1-year high point. Yeah, people are paying out the nose at the moment for PI for larger ships. 3.2 million for the wetware mainframes. Crazy stuff. In my opinion, a great time to sell. And yeah, whereas with minerals, right, I can definitely understand if for pyrite and even titanium, you're deciding that maybe I'll only sell a part of what I'm producing at the moment. Definitely understandable. In my opinion, when it comes to PI, right now, you'd be crazy not to just sell everything that you are producing, because these are, well, extremely high prices. I wouldn't say crazy. I can definitely understand people still building up reserves there, but these charts, in my opinion, are indicating sell, sell, and sell, because these are really good prices. Next up, we've got advanced moon materials coming in at 3055. There we go. And well, if you want a reverse situation, or no, a completely different situation, I should actually say, what was starting out like a reverse situation, here is crystalline carbonate. Basically, CCP also decided to increase the availability of ores through moon mining at one point, and that just became an oversupply problem in advanced moon materials. And you can see we start the year at 175, and then we have periods where we were below 100 disk for crystalline carbonate. But finally here, with the expansion again, or a little bit after the expansion, decided we do want moon miners to still get some value for the stuff that they produce, so they cut the yields there by 25%, basically recovering the price to almost the start of the year. So this is entirely you know, a CCP balancing act, I think, that you can see here. We need to make things way more available, and maybe even a little bit too available in advanced moon materials, bringing the prices down by 75% basically, or no, yeah, 60%, something like that, I think. But then too much for too long is not healthy either, and CCP came in as well, trying to recover that value for moon miners. So crystalline carbonate, you can see here basically almost a full recovery. Then for Caldari, it's tungsten carbide that you can see spiked up to a 1-year high point as well, and basically recovered the 150 to 175 range as well. Then for Minmatar, it's Fernite carbide, right? You're gonna see that same story, except that for Amar and Minmatar, because they tended to have lower or more stable volumes. Actually, Minmatar not lower volumes, but more stable volumes. You can see how they spent most of these 6-7 months here over the summer and before and after that, around 100 disk, very stable, really low prices, and yeah, a massive CCP trade that could have been made in the last month or so. So this is back to a 150 pretty much, where we again started the year at. And then finally for Amar, it's tungsten carbide, starts at 150, comes 100 into play a couple of occasions, and is back at the 150 range. Now, where I placed my best bets, unfortunately, is not in the carbides, but in the metamaterials. So let's take a look at those next. And finally, it is happening, so I just needed a little bit more patience, but I do feel like it was a little bit after the carbides here. But yeah, starts at 12.5k, a little bit above that actually. The depressed period, very, very clear. And here I did decide to buy on some of these dips to 1-year low points. And so now for photonic metamaterials, for Galente, we're back at 12,500. So there's definitely like a easy, I would say 50-60% profit again for me to take on some of my purchases. Then we've got Caldari with non-linear metamaterials. That one is still struggling, right? Starts at 22,500 and did get a spike up to 15k, but supply is already crushing that. And so what I personally think the problem is with metamaterials is that these will have more reserves, being I think an intermediate product through a lot of processes, through industry, so that it may be that there's enough inertia out there to keep things in check, whereas the carbides are the raw resources, so you decrease availability, those supplies go down, price response immediately. Non-linear metamaterials are needed in a lot of the processes, like intermediately, and so as a result, any somewhat competent industrialist in EVE Online will have a batch to weather a potential drought or something like that of these materials, and there's no real need to go to the market when prices are too high, and so you actually have some room for that to slowly go back up. So I will need patience, I think, basically, for the non-linear metamaterials. So Caldari showing why. And then for Minmatar, let's see, that's this one. Yep, there we go. Also, again, starts at 20,000 discs. The depressed period is here as well, but the recovery is still not there. And finally for Amar, that's a little bit better. Starts at 15k, goes to 10k. And we are almost back there as well with 13,650. So yeah, just need a little bit more patience. I do think that eventually those new prices will become what needs to be bought for industry, and that we will actually see higher prices here as well. And then the other advanced boom materials, of course, are seeing probably like an in-between, because I think some of these will be more raw materials, others will be in that intermediate state. So we start here here, for instance, for fermionic condensates at 62.5, we go below probably 37,000 disc down here in September, October. CCP intervenes and we're back at 50k. But this is far less of a safe bet, you could say, as the rawest materials like the crystalline carbonides. If I'm not mistaken, that is the situation. Yeah, 48,000, so you gotta have a little bit of stuff done to that. 165, that's pretty much as raw as it gets. And then we can continue the trend, but I don't think that that there's that much difference, right? You can see that all of these have recovered a lot, but they're not at the same point as they were a year ago. Let's see if we can find an exception. Nope, nano transistor still has a ways to go. Yeah, there is one exception here. Phenolic composites actually spiked up to almost 2,000 disc and basically landed back where it started a year ago. And then you can see right away 1,400 disc instead of like 50k or something like that. So the more raw you go, the cheaper the price, but the higher the volatility and the faster the recovery of the price. Pressurized oxidizers also fully recovered, and then because it's a newer item in my opinion, so you don't have that much old stuff lying around that can absorb these types of shocks. Reinforced carbon fiber, another exception to a one-year high point, 14,000 disc, and just about 2 months ago 7.5, so that's almost doubling in the price. Ceramic fibers finally also full recovery, pretty much at 350, so that is raw and in line more with carbides than some of the other stuff. So interesting pattern in here, and yeah, a CCP trade that could have been made, especially in the carbides, and a lesson learned from my perspective. What will respond most quickly to tinkering at the base, at the resources, it is the cheapest ones, the smallest ones, those closest to those raw resources, and we need more patience, I think, for the rest of them. Which brings us to Tech2 ships coming in at 38.10, let's say. There we go, and for Tech2 ships, most of the year has been spent just trying to buy the one-year low points and having the patience to buy now and then sell later. Now I think we're still basically in that mode, but I personally do think that eventually that we will start to see more volatility, as for instance the shock that just happens in the carbides will then ripple through all the industrial processes. Eventually I think all the other intermediate problems will be pushed up as well because of that, and then production cost goes up, supply should come down, and we should start to see more volatility. But for now, the basilisk, for instance, is still very cheap, 126 million to less than 110 million for the buyers. So if you still haven't gotten a cheap basilisk, there is definitely still an opportunity for you to buy on the cheap. Cerberus, I think, was in the same situation. Yep, 126 to 122, so you're not buying the cheapest anymore. I think right here you can see how minimum prices sometimes went really low, close to 110 million. That's probably not going to happen anymore. 1 year low points will be difficult, but depressed ships, oversupplied ships are still a possibility, and you can see here how even at the tail end, the daily moving average is still below the 5-day moving average and below the 20-day, which is a place where it's easy to, for instance, put up a 123, 123.5 or something like that, and you get a very high chance, because of all of this stuff that's still coming in here despite the low prices, to actually have someone sell a Cerberus to you, to that buy order. If the chart is reversed, if you get the daily averages that are going up, then it's far harder to get a buy order to trigger. The Curse did have a very nice recovery on the changes to advanced mold materials, and thus here maybe a little bit of speculation happening that some of them could move more quickly, but the trend at the moment here is clearly that there is still too much of Tech 2 ships out there, 164 million to 141 million. Pressure is back. You can see here how the minimum prices are already back down to well below 150, trying to push those prices back down. But the good news is highest price point here in 7-8 months, so potentially a return to volatility is possible, because the reason this happened is because of expected increased cost of production, and that's not going away, I don't think. Then we've got the Damnation that is unfortunately more slowly recovering. I think the larger the ship, the more stable things will be, but also the more they will actually show the trend. So here, for instance, the Damnation, right? Not that long ago, you could have bought these for probably 230 million on this side of the chart right here for a couple of days. And we are now already selling them for 310 million, 270 for the buyers here. I think buyers know that you gotta follow suit, and I definitely have one, maybe even two Damnations that I could take a nice profit on. The Deacon, another one that's really low, so again, smaller ship. I think here we'll have a lot more inertia, although I also think that the potential for volatility will show up here more quickly. So you basically still have the opportunity to buy the Deacon for around 13 million ISK. Look at the numbers here, lots and lots of availability, but they're starting to stop, right? They're starting to go, no, we're not just gonna keep dumping Deacons at 14 million ISK here. So sellers and producers are probably starting to be a little bit more careful. We just have so much stuff still out there that for some of these ships it's going to take it a while to show up through the price, but that in my opinion also means that right now you can still buy that cheap Deacon. If you want in on what potentially can happen in Tech 2, you still have the opportunity. Eagle here as well, right? Bit of a bump up to 150. You can see how the pressure is still here, daily averages still trending down here as well, 116 to 110, not the 1 year low point, but pretty damn close to it. If you still want to stock up on potentially an Eagle or two, you can definitely do so. EOS, then I think that's going to be harder, but look at those buyers dropping off in the last 3 days. I think here it's going to be holidays, a little bit less activity, and thus buyers getting some buyers getting filled up, more aggressive buyers getting filled up quickly. 255 for the sellers, 300 million for the buyers though. So I think you could have bought these for 230 for these Kaban chips, and I bought mine at like 254, I think it was, so I can already take a profit yet again, but my horizon is a little bit longer than all of this. I want to see real volatility, massive price spikes come back in. Then we get the Aries. All right, buyers forced up a little bit, so it's not the best time to buy here. Next we get a Flycatcher. An in-between spot yet again. If you absolutely still want to buy a couple, I don't think it's a bad plan. Close to 38 million, 39, but it's yeah, maybe you want to wait for the pattern to show up where a bit too much supply still pushes the price back down a bit. Then we get the Guardian back below 130 as well, although you're too late for the best buys. That was early on in the week. Then here is the Heretic, and that's what we want to see a little bit more of. A spike up to 50 million ISK. So down here you can see a daily average at 33, sell for 50, coming back down very quickly, right? Any of these opportunities are spotted, and new ships coming in at a frantic pace, down to 40 million, buyers at 36. So it's still too early, but this is what we want to see. These price spikes are trades, and when it happens over the course of 15 days or so, that's when you can make some real money, of course. Then we get the Hound, and these gave me a lot of hope as well that this was gonna start to happen here. Price spike up to 25 million in October, another one in November. We're in a quieter period, and unfortunately it's hard to see where to jump in at this point, except right after this price spike you could have come in well below 15 million, back at 18, buyers above 15. So it's gonna be tricky to get back in, but if you still have some powder dry, some hounds lying around, which I do, yeah, hoping for that volatility, I think it is possible that it'll happen. Ikitursa showing the general trend, and of course to keep an eye on the Triglavian economy, 570 to 500 million, definitely the most expensive we've had it in basically 6 months. A little bit more volume wise here as well, dropping off for the holidays yet again though. Ishtar going back below 150, 152 to 141. Wouldn't call it a buy opportunity just yet, right? If you wanted to be ready, 130 price range has been available throughout most of the summer and fall. So be a little bit careful there, I would say. Don't be too early either. Kirin, another one of those logistics frigates, I think potentially can have the spikes as well, although the volumes are a bit lower than the stealth bombers, 16 million to 13 million. I would say that you could definitely still try to grab a couple of these. And then we get the Manticore, which again, big volume, big price response. Unfortunately here, you can start to see the trend coming through despite the holiday period, the lower volumes. Average prices are on the wrong side of the chart. So here we get daily averages above the week 5-day and the 20-day. So we're talking 18.5 million for the sellers, 16 million for the buyers. But if you look at these daily averages, it means that you basically have to put up a buy order close to 18 million if you want a chance that you'll buy a Manticore. Buying a Manticore at 16 million now is next to impossible. Then we get the Nemesis, a bit more spread on this one, but also not the best place. We're talking 15.8 to 14 million. If a bit more supply can come in and pushes us below that 20-day, you get a good chance to grab a buy order, but unfortunately now it's not happening. Then we get the Nighthawk, another one of these command ships that's back at 300 million, 310 in fact for the sellers, 276 for the buyers. So again, the bigger the ship, then buyers are forced up, because you can't just have a few hundred Nighthawks lying around, so that has to follow actual production cost way more closely than the smaller ships. Oneros also going back up, sellers coming in at 150, 115 for the buyers. And so here, despite the low volumes, maybe this time it works to the advantage of the Oneros, because that does mean that it's more susceptible to price shocks. On just a little bit more buying, you can basically push the Oneros up to a 150. You could have bought these below 100 million over quite a nice period of time. Buyers are hesitant though. They're still stuck at 115, so just like a little bit of demand can push the Oneros to 150. A little bit of a supply will also be able to push it back down to a 130, 120 pretty quickly, so be careful there. I always warned with the Oneros, right, you have very pronounced buy opportunities, but I would never hold more than 1 or 2 because of the lower daily trading volumes than the other logistics ships. Purifiers, unfortunately, also stabilizing here, so we need to see that break and us go well below 15 for the buyers before we jump in. You can try, but again on this chart it's going to be hard to grab a Purifier below 15 million. Rook also actually dropping off here at the right side, so 151 to 143, and I think right now, for instance, a 145 will potentially trigger for the Rook, but we're basically a little bit too late if you still want to buy at like 1 year low points. those are not very likely to materialize anymore, and I think now it's waiting for volatility to come back. Take a little bit of trades off the books, right? Take some profits, and then start to find the new trade ranges for these ships, and then hopefully volatility will have enough momentum so that we can get this done on a more regular basis than holding on and waiting for those sell opportunities. But I'd need to see a little bit more volatility in more ships before I think that we get back into that type of a mindset. Here, for instance, a Sleipnir though, that's very nice. That's what we want to see more of. 250 you jump in, 350 you sell, 250 you jump in, 350 right now, we're very close to that. Yeah, 244 you sell again. That is 2 trades in 3 months, very clear jump in point, very nice and pronounced jump off point. So this is what we want to see more of. Once we start to see a little bit more of that, I do think we can start to get that mindset of don't need to hold anymore, start taking profits off the book, look for the right time charts to jump in. And then here again, so that's right here, right? You can see how that daily averages sticks below that 5-day and well below the 20-day moving average. You can see how here eventually there is a bit of capitulation. Buyers are just completely gone. Put up a buy order here at 250, you're gonna grab a Sleipnir for 250, and then just a few weeks later you sell them close to 350. Very nice. That's what we want to see, of course. Then here's the Vagabond chart, also a slight sell opportunity, not as good a jump in point, but we are still selling these at 168 at the moment. Finally, the Zarmast as well, a bit more expensive, but not as pronounced as the other Ikitursa, as the other Triglavian ship right here. So yeah, for take 2, be on the lookout. I'm personally hoping and on the lookout for that volatility. Once we start to see that pattern show up a little bit more, I think I'll jump into more actively trading the take 2 stuff that I have and using that ISK as well. Take 3 ships next, 50-25. And there we go. Let's get started as always with the destroyers, but you see how here the Confessor at the tail end, minimum price is going back up, so basically we're closing the gap again, getting very stable, 47 to 43 million, despite the fact that there is not a lot of demand. 118 of them here are going to keep things nice and in check. This is not going anywhere. Hecate did jump up to a higher average price point, 55 to 51 million. I would not be surprised if this is slightly like event related or something like that. Yeah, it's a bit of a jump. Minimum prices are sometimes dropping off a little bit, but I personally think that everything else is stable enough that this will, you know, not start a wave or anything like that. Then we get a Jackdaw, bit of the opposite. 50 million for the sellers, but 45 million for the buyers, so there's definitely too much supply here. You can see how the minimum prices are starting to drop off a little bit, but still that's only a 5 million spread. It's 10%, but I would need to see way more of a downside before I jump in on the Jackdaw. And then finally we get the Zwepel, that's then slowly trending back up towards 50 million, 48 to 32 million. Unfortunately for the tactical destroyers, I think you can tell that very easily on this 1-year chart. Confessor was a little bit better here on a couple of spikes, but mostly the Zwepel here especially has been just completely anemic. And my theory is that the tactical destroyer has lost a lot of value compared to the very cheap Tech 2 ships that we have seen over the course of the last year. And I think that is basically the problem for tactical destroyers. Why spend 50 million for a Tech 3 destroyer when you can spend something like 100 million right here, 130 million for a cruiser, Tech 2 cruiser. And let's see if we can, Deacon is a frigate, a flycatcher, I think. Yeah, there we go. Or if you can spend, for instance, 40 million with Tech 2 resistance, more launchers, more weapons, and it's cheaper. It's 25% cheaper than these tactical destroyers. I think basically either they need to make them more powerful, or right now perhaps SB just needs a little bit more patience, you know, because Tech 2 I think is set to become more expensive. That could drive the tactical destroyer market, but you can also see how the volumes are super stable, well below 100, not going anywhere, even for the popular ones here, the Hecate 100 of them. We can see how it's not been a great year for the tactical destroyers. And so we moved trade opportunities, I think, for Tech 3 to cruisers, because those do have a bit more volatility. Look at that, the 160 to 200 range right here, several times at the start of the year. Very low buy prices right here, well below 160 then through this period, and then here above 200 again. 200, we're touching that again right now. So the Legion is back at 206 for the sellers, 158 for the buyers. So just a couple of weeks ago you could have bought this below 180, and you're again looking at some profits to be taken. So this is way better for traders, of course, as a type of a chart. And what changed here is that you no longer lose skill points when you are blown up in a strategic cruiser. And so as a result, I think that gave the market more legs, more volumes, and more interest in general, which means that it was harder to manipulate and it became a better market for trading. Loki here, also a couple of occasions. Loki is a little bit in, I think, a more tricky situation. Because it is the most popular one at the moment, because it also is a unique one, basically with the Tech 2, with the double tank options or bonuses. I think that does make it a very unique ship. As you can see how it's spread here, right, with the Legion, very noticeable, right? You constantly have averages around 5-day moving average, and then you get buyers being well below sellers, except in extremely high demand situation. For the Loki, that spread is way shorter, but then that also means that sometimes demand just really drops off, and so you can buy here for 180, 180, 180, 180 again, 180 again, and then it's not as structural, but you get to 230, 230, 200, 200, 200. So there is trading possible in the Loki, but I think it's harder to time your markets here because of those tiny spreads. Selling will be okay, but buying will be harder for the Loki. And then we get the Proteus, for instance. Well, Proteus, the least popular tactical cruise. I think it did get a buff somewhere. Was that here? But that eventually was just, you know, shrugged off. Mostly a 180, but here we did finally get a trade as well. Buy for 180, sell for 230 million, and now another wave has started here again. The Proteus back up to 224 for the sellers, 200 million for the buyers. Very impressive. And the Tengu is, well, also a little bit, you know, the most popular one, so I think most steady volumes as well, within our October sell opportunity. And right now Tengu is going for 200 million as well. So they've become more expensive, they've become a bit more popular as well, but especially I love the Legion, I think, for trading, and I think the Loki, while you have to really snipe the cheap ones, has that potential as well. Proteus and Tengu, there is trading to be had there, but it's, I think, a little bit less often than potentially in the others, although the Proteus here is doing another nice tradable wave right now. So yeah, for Tech 3, again, I would keep my eye on the cruisers and wait for stuff to happen in Tech 2 before going back to the destroyers. And then finally we get the extra product for the week, and we're gonna take another look at mining ships, 5630 for the last one of the year. Let's see what we can spot here for trends, because of course mining has also changed quite a lot. So let's take a look at that. So ships, we'll start with the mining barges. So here I'm not going to take the frigates here, so we're going to do mining barges and then the Orca. But here is the Hulk that basically had a really bad fall-summer period, went below 200 million for quite a bit, started here at 300 million, and is basically recovering. So maybe here we're also kind of seeing that there's not that much leeway, that much in reserves when it comes to the Tech 2 mining ships, because this feels like, yeah, production costs have gone back up. We know that from the advanced pool materials, and so the Hulk responds immediately. 268 million for the sellers, 250 million for the buyers, just 1.5 months, and we are back up from below 200 million to almost 300 million, to a 250 300 million range. So full recovery here for the Hulk on the 1 year basis. Next here is the Mackinac, same story, September, October, cheapest price 150 million. And we're back close to the 300 million range, 285 to 268. And then finally we get the Skiff. That has a worse chart because of a data point right here in the middle. But you can see on this one, 200 million. Then here the bad summer and fall, and then finally at the tail end here, although it has a little bit more leeway, I think a little bit more reserves, 183 to 165. Very clearly we are heading for a full recovery in the Tech 2 ship mining barges that have become yet again expensive. They're also far more important than before. They're way more effective than an Orca, and even a Rorcal is no longer equal to 8 hulks or whatever it was. I think that was calculated, no crazy numbers like that anymore. And they're the ones that really profit from the bonuses, the boost bonuses. So the new fleets really are, well, a single command ship, capital command ship for mining, supported by your exhumers. That's how you get the most bang for your buck. And then for the Tech 1s, let's take a look at those. Definitely a bit more stable and actually expensive at the tail end, and here I think they could basically be the casualty of the increased interest in just a need for resources with all the capital production going on. That we slowly are edging up in price for Tech 1 as well. Minerals doing a little bit better. And do we need something else for that? I think for that I need to go to the coveter blueprints. No, it just needs minerals. So this is just generally a more expensive coveter, the most expensive for the whole year at 59 million for the sellers. The procurer, similar chart, right, starts at 37.5, ends up well above 50 million, and the retriever as well. So this is not a recovery, this has just become more expensive as well, at around 60 million for the retriever. So exhumers and mining barges are expensive. Exhumers have recovered and mining barges are just more expensive over the course of the year. And we'll also take a quick look at the Orca. That for me used to be the go-to. Also basically recovery slash expensive went up to 2 billion in March as well, but we're talking 2 billion for the sellers, 1.8 billion for the buyers, which to me is another indication that there is interest in mining in EVE Online. It is an activity that is a niche for quite a few players actually, that they enjoy that more relaxed play style, and then especially in a group try and optimize, use an Orca, support that with those mining barges, and there you go, you get a group that is grabbing resources the most effective way. It is very passive as well, right? You don't like shoot stuff, it's not action packed or anything like that. Well, you shoot the asteroids in a way or in a sense, but it has its place in a sandbox game. I think we have to not forget that, and the fact that we see these recoveries, I think, is an indication that we're in the right direction to also keep value in that mining activity, and SSP at the moment seems to be succeeding with that one as well. But unfortunately for those that need to jump in or need to replace their ships, we are in expensive mining ship territory as well here at the start of 2023. Overall, I'm pretty happy with this year. It's been very interesting, and I think the economy is in a pretty decent spot with value within it, considering considering what we see here in the market. So thank you very much for watching, guys, and thank you all as well for your support over the last year. I know I produced fewer videos, but I'm basically trying to find what I want to do next, and for EVE Online on exploration and things like that. I was kind of talked out, but perhaps a new chapter might come in 2023 with the Allegiance system. We will see, of course, how all of that evolves. I personally am still very much interested in EVE Online, enjoying my time in the game, enjoying watching the sandbox, learning from the sandbox, and bringing you guys the information that interests me, and we will continue to do that in 2023. Have a very nice new year, guys, and as always, I'll see you next time.